Hey, this is Jack from Alpha Charts with a state of the market video. Today is November 5th, 2022. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, starting with the SPX. Just a quick little recap. Downtrend firmly intact as we found out this week. The week was down 3.35%. So very ugly looking week. You kind of have this toppy look to this general area. Again, maybe it holds, maybe it doesn't. What do we know? We know price is below all of its moving averages, right? These are declining 200-day. I really thought here we may come up and try to retest it. Couldn't even muster to do that, right? It failed right at basically the 50-day, right? We had 1 day above it, 2 days above it, 3 days, and then fail. So we have a declining 50-day, declining 9-day, declining 23-day. So everything is very, very bearish looking. Prices under all these moving averages. Even on Friday, whatever, a little higher volume, price was up 1.36%. Nice, but I guess the one solace is that this area has held so far, at least. We'll see if that continues. You have the purple line here, and again, going back to the weekly chart, you'll see purple line is from the 2018 lows. Okay, so we're not even talking about the COVID lows. We're back to 2018 lows, and that has been important, multiple times in the past, right? And so we're back basically watching that VWAP. And yeah, I mean, right now the path of least resistance is lower. It's hard to make an argument that it's not. Look at RSP, which is the equal weighted SPX. You see RSP is actually doing better than the SPX. So we have that going for us, right? It's still above the 50-day and above the 9 and the 23-day. So, so with the declining 200-day, but again, looks better. And on the week, it was down only 1.62%. So you see, what does it tell us? The bleeding is in the mega caps, right? The major bleeding, Amazon, Apple's, all those products. So that's a positive, right? Equal weight is looking okay. Looking at Qs, again, not quite as nice looking, well below all the moving averages. Definitely looks rougher. We have we have not taken out this low yet, but we're not that far away from it either. And then we have the trend line, and again, just to refresh your memories on what that trend line is. Let's just pull it back here. This was a trend all the way back to 2010, right? And there's your uptrend from 2010. This trend line is super important. Again, and coincides kind of with this area right here. So going back to the daily and just wondering on the weekly, what was this? Down almost 6% on the week. Again, very tech heavy. The NASDAQ is, right? So this trend line coming in here, 245, 246, wherever it kind of falls in. This area is at 238-ish or so. So again, we'll see if this top right here, 237 or so, is a big deal or not a big deal. This trend line, again, same general area. So that's the next level that I'm watching. Potential undercut of this 254-ish. Either way, though, it's hard to be constructive and long the Qs with a chart that looks like this. And again, down 5.88%. Equal weighted Qs were down 4.08. So once again, we're seeing a divergence between the cap weighted and the equal weighted. I think that's notable. I think it's notable. Now on the equal weight Qs, still an ugly chart, not quite as ugly, but still ugly. Still underneath all its moving averages. So again, it's hard to be bullish on this particular chart as long as we're still underneath all these moving averages. Now, price gets above, these moving averages and the 50-day moving average, changes my mind. But right now, we're not that. That's not what we have. So Q's ugly, but again, notable. Equal weights doing better than cap weighted. IWM. So we still have this potential head and shoulders top. It's maybe playing out, maybe not, or double bottom, right? But a little bit better than the other indexes right now. This is always equal weighted IWM, and right now it's above the 50-day, above the 23-day, and above the 9-day. That's a positive. Again, not a great look. There's your 200-day coming down pretty fast, and it's about 4.5% above where price is today. That's not that far. I mean, the scenario of chop, a little bit of chop here, pull this 200-day down a little bit further, and then price could pop up above it, is still there, right? That's the bullish scenario, that we pull price in enough, get into this 183, 184 area, and price is chopping around, and then breaks above it, and then the double bottom plays out, right? Conversely, it's a very clean head and shoulders top if it decides to break 163. So as of right now, it's just choppy mess, right? There's no edge in this as of right now. It's getting to the point where it's gonna have to make a decision, above the 200-day or break down, but we're not quite there yet, and we may not be there for a little bit longer. So IWM, again, looking a little bit better versus SPX or QQQ. And on the week, it was down 2.45. I'm just wondering, versus 4.08 on the QQQ, and the 1.62. So RSP did the best out of the three of them. So that's kind of interesting too. Looking at IWO, and this is small cap growth. On the week, it was down 3.27. Decent amount there. Again, we had rejection at the 200-day, rejection at the 200-day, right? This would have been really nice to see it pop up. It didn't. You have that head and shoulders look to it as well. Again, only on confirmation, a break below 199, 200 area, would we have confirmation of the head and shoulders top. So right now, again, price right in the middle of all these short and intermediate term moving averages, 200 literally right above. We're talking about 5%, right? Within 5%. That's not much. And so we'll see how it reacts here, right? This is like a wait and see, like it could go either way type of market. And so it's a market where cash makes sense so far. That's what I'm seeing so far. Let's look at the individual ETFs. Here's XLF. Still with a declining 200-day, but we're starting to see some more bullish look to the short intermediate moving averages. This 50-day should start to really flatten out soon, probably this week if prices stay above it. But again, is price going to get rejected at the 200-day, or is it going to take it out? We don't know the answer to that. It's only 2.5% or so away. And so we may get our answer sooner than later. Decline 200-day, though, the edge goes to the bears as long as price is below declining 200-day. SMH, maybe the most important of all of them. And on the week, what we do on the week here? 0.72. So you're seeing some relative outperformance in SMH. Again, do we know if this is just a bear flag and it's going to break down? We don't know that yet. But relative outperformance in SMH, that's kind of nice to see. Prices above these moving averages, you still have a very steep declining 50-day. See how far back 50 days is. So it's 155. 50-day is right here, right? So as we come through this week and we take out these bars here, again, if price to get above this area, right, above 195-ish, that 50-day will start to the descent will start to decelerate and hopefully start to flatten out over another week or 2 weeks or so. Remember, U.S. elections are on Tuesday, so that's going to be a major event on Tuesday, and everyone is expecting change in government. So we'll see if that comes and how the market reacts to it, right? How much of that's priced in, since that's what the expectation is and has been for a while. But either way, the nice part was that we were seeing SMH start to outperform on a relative. That's nice. All right. So XTN, let's look at transports. What's transports doing? On the weekly, we saw it only down 1.19. Okay, not bad, right? Above all the moving averages, held the area it had to hold. Again, back from 2018, right? 2020, kind of undercut it, but then reclaimed it rather quickly. So again, all the moving averages are now underneath it, and you have the 200-day up here at 77 or so. So we'll see what happens at this point. But again, constructive looking on the transports. XHB. So housing, home builders, not good. Not good at all. Down 5%. So about what the averages were down, the cap weighted averages, and price underneath there. So I think there's, most likely home builders another leg down, to this bottom again. So 3 out of the 4 index ETFs that I use to measure economy, basically the financials, semiconductors, and transports, those 3 looked fairly constructive, with home builders, again, I'm using that more as a proxy for jobs, looked kind of bad. So that's the dynamic we have, but 3 out of 4 is not terrible. Let's go ahead and delve into the internals of the market, and let's see what is going on there. Starting with the VIX. So with all this volatility, we'd expect the VIX to be shooting higher, and we're not seeing the VIX shoot higher. We're seeing it go lower. Right? What else are we seeing? We are seeing credit spreads, right? We would expect them, if things were getting bad, to go higher, and we're seeing lower highs, higher lows too, but again, not shooting higher, nothing that looks like this. So I think that's definitely a positive on the market. We're seeing put call ratio, which is a sentiment indicator, really never get to extremes. No signal there, but no extremes means no edge, right? What else? Let's see. The 10-year yield, it did start to rebound. Hasn't made a new high yet, but still elevated. And the dollar DXY, I'm going to look at. Coming in a little bit, right? Lower highs here, and so far lower lows. We don't know if this will end up being a lower low too, but the dollar is coming in a little bit, which is kind of nice to see. Maybe it's a flag, right? And we're going to go up and hit the 120 or not 119, 120 area. Very possible, not too far away, right? About 10% away. And that would be a negative on the market. But right now, we don't have that, right? We have the dollar coming in some. Looking at breadth, breadth is not deteriorating. It's back above a 50 again, and not too bad looking. So let's put it all together, right? So basically, the way I am seeing this market is that the large cap and mega cap names are not they're not performing well at all. Things like Amazon. See what Amazon was down for the week, just so you see, Amazon down 12% on the week, right? Apple probably did better. Down 11% on the week, right? Google down 10% on the week. Meta, which I don't know if you would even, down 8%. But Nvidia, I bet you was up. Nvidia was up for the week, right? We saw that in semiconductors. So that is the dynamic that we're seeing. The mega cap stocks that we are, Microsoft is the other one, right? Microsoft, down 6% on the week, are really driving the indexes. But under the surface, there's names that are really starting, that are not breaking down. They're not making new lows, right? And we see that because there's more and more names reclaiming the 50-day moving average, 52% now above the 50-day moving average, right? And And the other one is MMTH above the 200-day. Let's just look at that one. Now almost 35% are above the 200-day. And so again, not crazy great, but we're only about 4 or 5% on most of these charts away from the 200-day. And here's how it look on the daily. So with that being said, it's a constructive look, and a lot can change very quickly. Again, we do have elections next week. The market we'll find out if the market has priced in all this stuff or if it hasn't, right? So a lot going on there. I would tell you this is a stock pickers market for sure. And again, there's some things to be had under the surface. So anyway, tomorrow I'll be doing my stocks to watch. Nice lead in, right? And we're going to go ahead and go over a lot of those names that are doing well under the surface. So check that out on Twitter at AlphaCharts365. Make sure you follow me there, putting out content all week long. And I hope you all have a great week. Take care. Bye.